This company is Starbucks, and it has historically beat S&P. The cool thing is this, guys. Right now, based on the price of Starbucks stocks, the dividend yield is 2.4%. So it is for us to think about, do we want to put the money into Starbucks or do we want to put the money into the banks? Currently, the stock price have been dropping and dropping like crazy. Okay, it has gone all the way up, okay, to 2021. Even past COVID period, it dropped, it went up, and then it went down, and it has not recovered since. Anyone knows what's the issue? They have some ongoing issues, okay, which makes the stock price goes down. A lot of times when we talk about issues and why prices go down, a lot of people will think that it is the revenue, the earnings. But let's take a look at it because it's very interesting in my opinion. Okay, Glenn, I think Glenn is in the known. Are you working for Starbucks? Okay. It is not because of earnings report, because even in the last report, the latest report, they have beat earnings. They have actually beat expectation. Their profit margin increased, their EPS increased, everything increased, but the stock price is not going up. Okay. Or 3M, they also have a legal case, right? Excellent. Now, it's because, all right, there's ongoing issues. So let's talk about some ongoing issues, and then we can take a look to see whether it's an opportunity or it's something to avoid. All right. We have not talked about 3M yet, right? Okay, maybe next week, but I think it's really downtrend all the way, so a little bit scary. Okay, yes, Sai actually mentioned worker strike. So it's about their union, and their union has started going against Starbucks since 2022. That's where you see the price drop. There's an ongoing dispute. I was reading about it. It was very interesting because the workers of Starbucks suddenly they just gathered together. There wasn't any trigger point. I was trying to read. So there's a lot of issues regarding this, and it has not been solved for about 1.5 years plus. This is quite concerning. And what happens is their employees went onto social media and asked consumers to boycott Starbucks. From the increase in revenue, profits, and things like that, you can see that the boycotting effort, it is not very impactful. There's a certain impact, but because of the whole entire media, the perception, Starbucks stocks is going down. So it affected the investors more than the coffee drinkers. Very interesting. By the way, later we will talk a little bit more about this, but this is the efforts of Starbucks. I have been really reading through their reports, seeing what they are doing, and they are putting out a lot of effort trying to really go into appeasing the employees, okay? So they are telling the employees we will have a innovation of recognition, we will actually increase the pay, we will really invest in the store managers. They realize that this is a very important portion because the store managers has a lot of power and say over the well-being of the employees. So this is what they are doing. Now, however, the employees are still very unhappy because Starbucks, they are taking a very interesting approach. So they want to go store to negotiate. They don't want to have a nationwide. They don't want to say, okay, throughout the whole entire US, it is mainly happening in US, let's have this blanket policy. They don't want that. They want to go state to state. Okay, in Texas, is this a particular rule? In New York, it's a particular rule. And I think it makes some sense because you cannot actually pay everyone equal throughout the whole entire state of US, right? However, the union, they're not very happy. They say we want to unionize. We want everything to be standardized. So it's very difficult for Starbucks. So how are they going to solve this? Let's take a look and see. Okay, I don't think they have a very clear solution to this yet, but these are the things that have been rolling up, talking to the state, federal courts. So interestingly, what I see is this, the revenue is not being affected. The profits are still coming in. People are still drinking coffee. Maybe after the people who start a union, they get thirsty, they go to Starbucks and buy water. Okay, something like that. I do not know. Okay, but as a business perspective, if you're holding it for dividends, you're holding it for growth, I don't think the union will last forever. I've not seen a union that lasts more than 5 years, 10 years, correct? What do you guys think? Do you guys think that Starbucks can survive this? Okay, that's the whole idea. If you think that you can survive, you can type Y. If you think that it's very uncertain, you can type a question mark. So far, I'm not super old, but I'm not super young, 40 plus years old. I've seen cases come and go. People forget easily. There was a point in time people were boycotting Facebook, boycotting Meta, and they say we are no longer going to use Facebook as advertisement. 1 year later, everybody is using it again. They just forget. Okay, so this is my opinion. I think Starbucks will survive this, and that's why now it's a good opportunity if you believe that they can overcome this. The second issue they have is the plan in China is not going as well as they had thought. Okay, so Starbucks, one of their big growth plan is in China. Later I'll show you the numbers and you'll see why China is so important to them. So the first thing is they have a strong competitor called Luckin Coffee. How many of you tested it before? If you tested it before, you can type your favorite coffee drink in Luckin. I don't know why. I personally find that the coffee in Luckin is very interesting. Okay, there's a coconut latte. In case you all haven't tried before, maybe I should send you my affiliate link because every time you buy a coffee using my app or something like that, or you download the app using my link, I'm going to get a coffee for just 99 cents. Okay, I don't know whether you have seen that before. Now, the irritating thing about Luckin Coffee is you definitely must download the app to actually purchase the coffee. Have you tried it? Okay, so some of you think that Luckin is nicer, right? Now, I also think that Luckin is nicer. But interestingly, after a few times of drinking Luckin, I do not know why, automatically, I will still go back to Starbucks. Okay, so this is interesting. Anyway, there's one in Tanjong Pagar near my office. It is popping out everywhere. Okay, you can go and test Luckin. But in China, Luckin is growing a lot faster because I think they really cater to the localized taste. And in the China, the people there are becoming a lot more health conscious. At least that's what the report says. So Luckin, right, they are positioning themselves as being healthier. But when I drink it, I definitely know that it's not healthier because it's much sweeter. So Starbucks is fighting against that. Okay. Now, you've boycotted what? You've boycotted Starbucks for decades. Wow, hey Cindy, don't like that. I'm going to invest in this company. Okay. No, it's up to you. It's up to you. Okay. Anyway, just you're talking about Luckin or Starbucks. Hey, actually, I also like the kopitiam coffee, which is about $1 only, right? Why I have to go and drink $7 Starbucks? Somehow, Starbucks, they position themselves. Okay, in case you all didn't know, right? They position themselves as the third workplace. Okay, the third home. So you have your home, you have your workplace, second home, your third home will be Starbucks. There's the place where they believe that when you want to relax, you want to do your work, you can please welcome to come to Starbucks and work. Now, the thing is this, during COVID, things change. People really eventually work at home. And people do not really hang around in Starbucks because of all the COVID rules. That's why they get very badly affected in COVID. But from the, I would say, revenue and profits, you can see that they are increasing. Okay, guys, something to take note, the numbers. You can see this is in 2022, 1 year plus ago. They had their 6,000 store in China. And in 2025, they are aiming for their 9,000 stores. So what it means is, right, in 3 years, they want to increase by 3,000 stores in the market. It's actually very fast growing. They are crazy growing full all out into China. And let me share with you, this is their, I would say, number of stores that happened since 2000. You can see them growing almost like a 1,000, 2,000, about 2,000, like, or 1,000 store every like 1 or 2 years. But suddenly, just in China, right, they want to go to open the 3,000 stores, which that's why China is very important to them. Now, you can see right now, they have about 38,000 stores. So to grow a 3,000 stores in China within 3 years is almost growing 10% of their whole entire global reach. So this is what they are aiming for, by the way. They are expecting, okay? I love their language. I love their language, okay? So even in the China language, they say Starbucks is investing for the long term in China, and by 2025, Starbucks will have expanded. I love the way they actually put across this idea. We will have expanded. It's already done deal, okay? So that's one thing I like about Starbucks. And you can see by 2025, globally, they want 45,000 stores. So 9,000 stores in China, okay, you can see is taking a quite big significant portion, 20% of their whole entire global franchise. Okay, that's huge, okay? That's huge. One thing that I really like a lot about Starbucks is they are continuously growing. They are not thinking of slowing down, which actually makes me wonder about one portion. And later I share with you a very interesting findings I have about Starbucks, okay? I think it's very interesting. So what are some of the key reasons to buy Starbucks stocks? Number one, you can see that their revenue and their profit is still growing every single day, not every single year, every single day. They have the records. Where do they get the records from? They have their Starbucks app. How many of you actually downloaded this app? If you did, can you please type A? For me, I downloaded this app because I think there's some points, so you can get to actually claim. I don't really remember what the app is totally for, but you just download and notice one thing. Guys, using this app, right, you do prepaid credits. So in 2003, last year, they have $15 billion loaded into the Starbucks apps. Free money, okay, or not free, money that is interest-free for them. Take note of this. This is a very important component, okay? And this $15 billion, maybe some of us, we forget our password and things like that. Some portions of it, there's a study that shows that maybe about 10 to even 20% of the prepaid credit people forget to use. And therefore, it is gone. It is gone into the bank account of Starbucks, okay? So this is a very powerful strategy. I'm not saying that it's good or bad, but this is what the company is doing. And if you are a shareholder, it is supposed to be good. Still have stock value, right? Okay, Peter. Now, there's one more thing, right? Okay, one thing that you can consider buying Starbucks, which I'm very inclined to buying, okay, again, please do your due diligence, is because they are pushing a lot to increase shareholders' value. Now, the two big issues they have, which is the employees' issues plus China's issue, I personally think it can be overcome and it's a little bit short term. But what they are doing for the shareholders is amazing. Maybe that's why the employees are not happy. Okay. Now, let me explain to you what's happening. I'm going to show you a very ugly, or I call a rule breaker situation about Starbucks. And then you may get a shock. Okay, let me just go into the Jita portion. This is Starbucks. You can see a few things. I've added a few things to explain the whole entire scenario. But you can see again, guys, revenue, the top line is increasing steadily. The only issue back then was during COVID 2020. Then after that, you can see that it keeps growing and growing. So the revenue right now is $33 billion. The price right now, right, let me show you, is $94. Okay, it's $94, and you can see 94. Back then in 2019, it's about 94. So can you see? In 2019. But 2019, right, the revenue was 24 billion. Now it's 33 billion. It's $10 billion more. You cannot tell me that it's the same valuation. You cannot tell me that the stock or the company is worth the same as the certain number of years ago. Okay, get what I'm trying to say, right? Now, and the cool thing is this. The cool thing is there's one thing that I really don't like as an investor, which is look at the book value. Because my favorite way of analyzing a stock is using the book value. So I thought it's very apt, okay? It's very interesting to bring this out so that every one of us can learn from this. You can see that the book value per share is negative. No, what do you think of it when you see negative? Shareholders' equity is minus. It's minus, and minus a few billion. Isn't that scary? Okay, it means your net worth is minus. So you're holding on to a company with a negative net worth. Initially, when I see this, wow, I really feel like it's I don't know, I feel like puking already. And okay, I went to actually study a bit more and I understand why. So let me explain what happened and then we can judge for ourselves. Again, whatever that I mentioned, right, it may be a little bit biased because I done the study. And sometimes when you study the stock, right, the more you study, the more you may like the stock. So it's very important for you guys to tell me, hey, Sean, you're talking nonsense, okay? Now, what does negative price to book value mean? Let me explain to you guys. Okay, now, what is happening is this. Okay, let me go back to here first. Now, when there's a negative price to book value, right, where is, oh, I'm opening too many tabs. Okay, here. Now, you must understand something. Book value is net worth. So how do you get net worth? How you get net worth, right? Is actually, okay, this thing, book value and equity is the same. You must understand. Book value is the same as equity, is the same as net worth. So when people ask you, hey, what's your net worth, right? They can also ask you, hey, what's your equity? Okay, this one is accounting terms. For those who are accountants, you may understand a bit more. So you can say that, hey, my net worth is minus 6 billion. Wow, this is terrible, right? But this company is very interesting. It's because you must understand, for a company to operate, they need assets. So for Starbucks, they have assets like all their shops, all their machines, all their cash. These are assets. And then how do they finance the assets? Imagine you want to start up a Starbucks shop right now. Okay, so if let's say I want to start a Starbucks shop, okay, and I buy a license from Starbucks, you can't franchise Starbucks. But if you become a franchisee, you decided to work there, if you actually open up a Starbucks shop, you may need maybe 1 to 2 million. Does that make sense? Because the shop needs a shop front, you need the location, you need to pay rental, you need to buy all the equipments, you need maybe about 1 million. This is the amount of assets you need. So typically, how do businesses finance all these 1 billion? 1 million, sorry. This amount of money they need, right? Where do they get the money? They get the money either by breaking their piggy bank. Okay, you go to your piggy bank, you break it, and you say, okay, I've saved 100,000 over the years. So if you save 100,000 over the years, okay, let me just draw this for you. Okay, assuming, okay, you need 1 million worth of assets to run the business. Now, where do you finance these assets? You finance these assets through two ways. One is your piggy bank. Now, if it's your piggy bank, they call it equity. Equity means, okay, this is my sweat. Okay, no, not sweat equity. This is my real equity. My money that I put inside. And let's say I only have $100,000, 100K. So where do I get the other 900,000 from? I get the other 900,000 from, where do I get? Okay, from loan. Very good. Okay, from loan, from bank loans, borrow from your mother-in-law, borrow from the bank. Okay, so this is the way to do it. Now, bank loans, they are very risky because there's interest. You have to pay interest. Does it make sense? A lot of people, if they can, they rather put in more equity and they cut down their interest because interest eats into your income every single year. The thing is this, a lot of listed company, so instead of getting a lot of loan, they raise funds, they raise equity, they sell their shares. So when they sell their shares, imagine they sell, let's say, another 400,000 worth of shares, okay? 400,000 worth of shares. What it means is they don't have to take so much loan, okay? Because, okay, so they sell the shares to the public and then they only need to take a 500K loan. Now, when they sell shares to the public, right, do they need to pay interest? Answer is no. Okay, because you are the shareholder, we are partners. It means that you don't take money out of me. It's only when we make money, then I will distribute the money, which is called dividends. What happened is this. Let me explain to you guys what happened. Starbucks, they actually launched a $25 billion shares repurchase and dividends program to return to the shareholders. Okay, let me show you this. The thing is this. If you look at 2018, okay, you look at their cash. Okay, look at their cash in 17, 18, right? Their total amount of cash is about 8 over billion, but the debt also increased. So this amount of cash comes from debt. They borrow money to increase the amount of cash. Now, with so much cash, what do? They actually pour back and give it back to the shareholders through dividends. You must look at this. Their cash only got 8 billion. Okay? And their equity, their shareholders' equity, back in 2017, 18 is only 5 billion, 1 billion. Now, they have already actively done something. What is it that they do? They actually actively, okay, let me see, where is it? Okay, they actively purchase back their shares. Can you see? This is the number of shares in the stock market. So this is 1.4 billion, 1.4, 1.3, 1.1, 1.1. Can you see that the shares is dropping? How do the shares drop? The shares drop when they start to buy back, and then when they buy back, what does it mean? Remaining shareholders, we benefit. How does it happen? Imagine you, me, Allison, and let's say Pete, okay? Let's say 4 of us, we are shareholders, okay? I need to explain this to you so that you understand what they are doing and why is it so confusing and why the stock market may not like this. Okay, so imagine 4 of us, you, me, Allison, Pete. Okay, so this is you. And then we have the shares of our company. So our company is called Chicken Lice, okay? Chicken Lice, L-I-C-E. Okay, Chicken Lice store. Okay, and then what happened is this. You can see, if let's say we are equal shareholders, right? We have 25%, sorry. Okay, we have 25. Okay, maybe I should add one more. Okay, let's say there's 5 of us. So each of us got 20%. Does it make sense? Now, what happens is when our shop Chicken Lice make money, we say, okay, one thing is we can distribute to each of us to have dividends. We can expand the company, or we can buy back shares. So we take the money, we say, okay, we're going to buy back this person's shares. So if we buy back this person's shares, now there's only 4 shareholders. So instead of 20%, we now own 25%. Our shares holding, we own more of the company. And if the company is the same value, we actually make more money. So if the company is worth 1 million, initially it's worth 1 million. When there's 5 of us sharing, each of us, we have an equity, or we have a certain net worth of 1 million divided by 5, which is 200 million, 200,000. Okay. But when there's only 4 of us, it becomes 250,000. So our value increases without doing anything. It's just because the company buy back and retire the shares. So far, am I making sense? If I'm making sense, help me put a yes, okay, or put a Y. Y for yes. Okay, it's a very important component. Otherwise, a lot of people do not understand why Starbucks is doing this. Now, why is Starbucks doing this? It's very simple. Because Starbucks want to use $25 billion worth over the years to buy back shares so that the remaining shareholders, we own a bigger portion of Starbucks. And what is the cool thing? The cool thing is this. Remember, this company has increased revenue over the years and increased their income, okay? There are certain portions because of supply chain, they are losing money, but they are bouncing back. This company is worth more and more each year. And then what happens is our percentage in this company also grows. So it's a double happiness. Get it on? Okay. So now, the question is this. It's very scary because they only have equity of about 5 billion, but they are taking the net worth. When we make money, all this become net worth. If we never give it out, it become net worth. They take 25 billion to give out. So they've been giving out a lot of money. And that's why it becomes negative equity. There's no more accounting equity left. Okay, so this is the part that is very confusing. Why is this? Now it's because they are borrowing more money. Now, this borrowing of money, at that point in time, it makes sense. Why? It's because in 2017, 2018, 2019, do you all remember, is interest rate high or is it low? Back then, is it high or low? It was extremely low. In Starbucks' mind, they are thinking, hey, instead of holding our shareholders' money, let's give the shareholders money, and then we borrow the money, and then we pay a very low interest. Ta-da! Makes sense, right? But what is happening now? Now the interest rate went up. So when I dig in further, I'm very concerned. I'm very concerned because they're holding a lot of money. They're holding a lot of debts. So when I go and check, actually, they did not borrow money from banks. They issue bonds. And the bonds they issue, okay, is about 3.5% of a coupon. So it's already controlled. Meaning you say, as interest rate fluctuate, it doesn't really affect Starbucks that much. A certain small percentage of their bonds is a floating rate, but the rest of them is a fixed rate. So don't have to worry too much that Starbucks will be affected by increasing interest rate. Okay. Now, the last thing is this. Last thing is this. Okay. The last thing is, do you all remember just a few slides ago, I mentioned something very important. One thing that Starbucks also have right now is interest-free money. Where do they get their interest-free money from? They get their interest-free money from their Starbucks apps. So they can still take money to run their business without needing to borrow so much. And at the same time, whatever money they get, they return to shareholders. So listen to this. When we invest into Starbucks, what we are investing in is into a company that whenever they make money, they will take the money to either give us dividends or they repurchase shares. Okay, repurchase the shares. And therefore, regardless what is happening right in this component, we actually benefit. Either we get dividends or our worth in the company increases. Make sense so far? Now, then the last portion is this. How do company like Starbucks actually run the business if let's say they are giving us all the money or buying their shares? Is by taking the money from the Starbucks apps. This is what I realized. 15 billion is a lot. Remember, their equity is only 5 billion. Now, every year, they got another 10 billion, $15 billion for them to run the business because the customers prepay. We prepay them to continue running the business. Interesting. I see a Sean Xia coming into this Zoom room. Okay, I'm going to just remove this person. Very deep. Okay. Okay, guys. In conclusion, okay, finally, I want to talk about the valuation. The valuation of this company, because we cannot use price to book. Can you see? Price to book has been empty for the past few years. So whatever they give us here, the 5 years average, and this is not accurate. Yes, this 15 billions is actually accounts receivable, no, accounts payable, in fact. Okay, this is an accounting term because you owe people money. Okay, this 15 billion is prepaid. So it's actually under liabilities, but the cash itself, okay, it is asset. Okay, got it? So now, let's go back to this. So you can see what can we use to actually evaluate whether Starbucks is cheap or expensive. I use the 5 years price to earnings. When we compare the 5 years price to earnings, it is half. And then we can compare, but you can look across. It's something that may not totally make sense because it fluctuates a lot. Price to cash flow is also very decent. In fact, for the lack of a better way to actually analyze, I would rather use price to cash flow and price to sales because their revenue has been a lot more stable than their income. You all notice that? So you can see their 5 years price to sales is 3.9. Their current price to sales is 2.9. And their 5 years price to cash flow is 29, but right now it's 15. So in my opinion, it is at a good value. Okay, this is for Starbucks. Now, finally, last portion is this. Their technicals. Okay, so technicals wise, right? This is what I see. Okay, I think that they are a lagging company because a lot of companies, they went all the way up, came down, and they have already gone to a newer high. But Starbucks, even though they have actually reported higher earnings and income, but they are still not near their latest high, which is in 2021. Okay, I think they have room to go. This is the profit target if you want to go short term. But for long term wise, I think Starbucks, in my opinion, given their plan, they're going to increase to 45,000 stores, which is another 10,000 from now. Okay, I think that they will continue to increase. I think that they can continue to expand, and this is a company that I will keep for long term. I do hope that you guys have benefited. Feel free to share your comments. All right, guys, I'll see you. Bye bye.